The commodity outlook going into 2009 is difficult to read. We've seen unprecedented falls in commodity prices over the last 4 or 5 months, as we've seen this deleverage action taking place primarily from hedge funds and others. The fall has in prices of copper, lead, aluminium, nickel, zinc have been really quite remarkable, and we've not seen this sort of thing happen before, where we can go from such strong demand to such weak demand. Now, it suggests a number of things. One, that the inventory adjustment through the end user cycles is being run down. Everyone's basically stopped, consumption's fallen, but demand's fallen even more. So inventories are being wound down right throughout the pipeline. Now, if interest rates and maybe some inflationary issues and the US dollar changes, if that's going to make the consumer change his view, or the stockists change their view, we could see a fairly significant rally in all the metals. They're oversold. They've done things that I've never seen in 30 years of watching markets, and I think that there's a reasonable possibility for quite a strong bounce. The other thing we need to keep in mind is the gold price, and watch this very, very closely. The gold price does appear to have been suppressed over the last several years, and you know, without doubt, the actions in the market since the highs of over $1,000 back in March of 2008 certainly suggest that there have been actions to suppress the gold price, and I expect that the short positions in gold will really come to the fore. I think gold prices will be quite strong going through the next couple of years, and that's going to impact, I think, on all commodities, and will have a big impact on the way the Australian share market works. One of the things that I've noticed over the past 4 or 5 cycles is that the gold price has a very, very big bearing on the willingness of people to come into the stock market, particularly in the resource sector. So let's watch that. One of the things which has been remarkable with the high oil price and high gold price that we had during 2008, the stocks for the gold producers, gold explorers, developers, and the oil producers and explorers were moving in different directions. The stocks were moving down while the commodity prices were moving up, and this is really quite unusual. I expect that to turn as we go into 2009, and we'll find both the oil price, for supply reasons, and keep in mind the supply of oil is going to be a critical issue for the next couple of decades, and short term I think we will probably see oil prices have a bounce, and I think the oil stocks will participate in that. Now, with the gold price moving higher and suggestions of it moving much higher, I think we're going to find that the changes and the accumulation underway in the gold sector will continue to improve. So they're going to be the key drivers. When we look at the rest of the market, the prices of copper and nickel and zinc in particular have been quite horrific, and we've seen closures of mine capacity in all those metals in Australia, and I expect to see maybe 1 or 2 more come through over the next couple of months before things turn up. But they will turn up because, again, supply side issues on these commodities mean that there isn't a huge overhang of capacity, not a huge overhang of supply. So if consumption holds, starts to pick up modestly next year, we're going to find though that the inventory managers right throughout the pipeline will want to increase their inventory levels, particularly at times when prices are low and interest rates are low.